So welcome to GoMed t-syte's blog for healthcare entrepreneurs. Today we're going to talk about venture capital. Most startups that we meet are attempting to attract attention from a venture capital fund. But is that really the appropriate investor for all startups? Venture capital funds specialize in ventures with very high financial potential. VC funds are usually organized with a separation between managers and investors, and they have limited time horizons, so that'll definitely impact their investment decisions. When we look at the historic performance of the venture capital industry, it is evident that the majority of returns in the VC industry are associated with a very few highly successful investments. It's like something like 5 to 6% of all deals are responsible for above 60% of profits of the entire industry. So it seems that what VCs are really looking for are startups that cannot just become big, but huge. And that's what the VC may be looking for when he kicks your tires. But many ventures were not built to become huge successes at the size of Facebook or Google, Uber or Airbnb, but rather they were built towards much smaller markets with slow growth rates and slower market penetrations. Such companies may just not be a good fit for an aggressive VC, and as a founder, you're likely to get a lot of no's when you shop up such a proposal between VCs. So do VCs have a crystal ball that can tell which startup will drive super returns? And the answer is, of course, no. Statistically, we know that a highly successful fund manager fails in as many deals as a less successful manager. It is the single unicorns that drive the returns and make some fund managers superstars. But rest assured that even without a crystal ball, most VCs still have quantitative criteria for assessing your venture. Because of VC funds' business model, they're likely to seek at least 10 times return on their money. Now, what does that mean for you as a founder? It means that if you raise money at a $50 million valuation, the investor is expecting you to be worth $500 million in the near future. So just because you get a lot of no's from VCs, it doesn't mean that your business proposal is not good. It just means that you don't fit very well to the very strict criteria of VC funds. So at t-syte, we work intensively with our companies to create the correct fit between the company and between the different type of investors. If you would like to hear more, we'd love to hear back from you, and we would definitely like to hear your proposal. Contact details below.